You think you're showcasing stellar performance, but what if I told you there's a silent standard, a global benchmark, that might already be making investors question everything you publish? Not because you're wrong, but because you're not aligned. And that alignment? It's called GIPS. Not a buzzword, not a compliance footnote, but the invisible trust line between your numbers and the capital they attract. If you've ever felt frustrated that competitors with weaker returns still seem to get more attention or capital, there's a reason, and it's not just marketing. It's perception, clarity, and above all, credibility. GIPS is the invisible currency of investment trust. But here's the twist: most people think GIPS is just for the big firms, the massive players with global presence, layers of compliance officers, and legal budgets. But that's not true. If you're managing any kind of client money, GIPS isn't a luxury, it's your sharpest edge. Let's pause here for a second. If you've ever questioned why performance reporting feels like walking a legal tightrope, how much to show, what periods to highlight, how to handle composites, GIPS answers that. But not in a vague, theoretical way. It gives you a map, a system, and in a world where investors are more skeptical and regulators are less forgiving, a system is survival. Now this is the part most people ignore. GIPS isn't about your returns. It's about the story your returns are telling. Are you cherry-picking accounts? Showing only your flagship strategy? Avoiding historical changes in methodology? GIPS knows. And more importantly, investors who understand GIPS know. Because here's what rarely gets discussed: the real value of GIPS isn't just standardization. It's confidence. When you're GIPS compliant, you're not just ticking boxes. You're sending a psychological signal to institutions, consultants, HNWIs, that you play at a global level. That your performance isn't just good, it's trustworthy. If you've ever thought to yourself, we have great numbers, but we're still not attracting serious capital, this might be your bottleneck. Your numbers are speaking, but without GIPS, they're whispering in a crowded room. Everyone talks about performance, but performance without credibility is noise. GIPS is how you turn that noise into narrative, and that narrative into influence. And influence? That's what raises capital. Let's be brutally honest. Most firms resist GIPS not because it's hard, but because it forces them to be radically transparent. It exposes inconsistencies, demands discipline, forces firms to define composites clearly, show full disclosure, and apply performance calculations uniformly. But here's the irony: the very discipline GIPS demands is the same discipline investors crave. If your reports are open to interpretation, you're inviting skepticism. GIPS removes the wiggle room. And that precision? It builds trust faster than any pitch deck ever could. And if you've made this mistake, you're far from alone. Thousands of asset managers either delay GIPS adoption or approach it like a checkbox exercise. They miss the point. GIPS isn't about compliance. It's about positioning. When done right, it's your signal to the market that you belong in the serious conversation. Here's what almost every expert avoids saying: GIPS is also a strategy. A strategic differentiator that costs less than any marketing campaign, but delivers infinitely more trust. Let's make this real. Imagine you're an institutional investor reviewing two managers. Both have impressive returns. One is GIPS compliant. The other isn't. Who do you call back? Exactly. It's not just the data. It's the trust behind the data. Now this is the part that changes the game. GIPS isn't static. It evolves. In 2020, the CFA Institute released GIPS 2020, a total revamp that made the standards more flexible, more inclusive, and better aligned with real-world strategies like private equity, real assets, and even SMA portfolios. That means if you thought GIPS didn't fit your business model, it's time to take another look. Because the new standards are tailored to the complexity of today's investment landscape. Whether you're boutique, quant-driven, multi-asset, or alternatives-focused, there's now room for you. The most powerful frameworks don't just make you look better. They make you be better. GIPS doesn't just polish your reports, it shapes your thinking. And thinking at the GIPS level? That's how global firms are born. Let's talk specifics. GIPS-compliant firms must define and maintain composites, use consistent calculation methods, include all fee-related disclosures, Present data over a minimum 10-year period, or since inception. Provide full composite descriptions. Document policies for input data, calculation, presentation. And yet, what scares most firms isn't the work, it's the exposure. Because once you commit to GIPS, you can't hide sloppy reporting. You can't cherry pick. You can't pretend a composite exists just for marketing. That accountability? That's the real asset. But here's where it gets real: GIPS is not legally mandatory. No regulator is forcing you. But serious capital allocators? They are. They're not asking you to be GIPS compliant because it sounds good. They're demanding it because it protects them. Think about that. GIPS isn't about your reputation alone. It's about theirs. When consultants or institutional allocators recommend you, they're putting their credibility on the line. GIPS gives them the cushion to do that. If you've ever struggled with investor due diligence questionnaires or RFPs, you'll notice how many times GIPS compliance shows up. That's not a coincidence. It's an unspoken filter, a quiet gatekeeper. You either pass through, or you're filtered out without ever knowing. You don't get investor trust with glossy brochures. You get it with systems that prove your word. GIPS is that system. It's the credibility you can't Photoshop. So if you're sitting there thinking, is GIPS really worth it for my firm? Ask yourself this instead: what would it be worth to have your reports instantly taken seriously by global allocators? What would it mean to never have to explain your methodology again, because it's standardized, documented, and bulletproof? You're not just adopting a framework. You're joining a league of global transparency, of operational maturity, of capital-ready discipline. Most people will look at GIPS and see paperwork. The elite see positioning. The smart see leverage. The bold see access. And if you're still watching this, you're probably not the type to settle for looking good. You're here to be good. Legitimately. Transparently. Globally. Here's a question worth answering in the comments. What's the biggest performance reporting challenge you've faced, and how did you solve it or wish you could? And if this gave you an edge, imagine what the rest of this channel will give you. Subscribe only if you're ready to think bigger, act smarter, and play on the level where capital listens.